Good afternoon, and thank you so much for joining us today for our webinar on the 6 megatrends in LatAm payments in 2020. My name is Abel Delgado. I am the Marketing Director for America's Market Intelligence, and I'm going to be serving as today's moderator. So before we get started, we're just going to give you a quick overview about who we are as a company. We specialize in market intelligence, helping companies with information and analytics to help them make the best business decisions possible for Latin America, helping them with their strategies with really key granular data. In the payment space, we've been active since 2003 and have produced about 300 or so studies. So we've been studying that area for a very long time, and we like to share a lot of our knowledge and also create these webinars to give professionals not only a way to educate themselves, but also a chance to interface with other professionals, share thoughts and ideas. So the next step here is to introduce our speakers. I'm going to let them do that themselves, starting off with Lindsay Lehr.
Thank you, Abel. Hi, everyone. Good afternoon. Thank you so much for joining. Really appreciate your time. My name is Lindsay Lehr. I am the head of the payments practice at AMI. I'll be delivering the majority of the content this afternoon, delivering our 6 mega trends, and I really look forward to your comments and questions and a really interesting conversation. And now on to our panelists. I'll introduce Alex and have him tell us about himself.
Thank you, Lindsay. My name is Alex Moore. I'm a VP in the Digital Solutions and Mastercard Lab, Department of Mastercard, and I'm very happy to be here.
Excellent. And we're also joined by Arnoldo.
Great. Thank you for inviting me, Lindsay and Abel. It's a pleasure to be here. So my name is Arnoldo Reyes, and I'm the Vice President of Digital Partnerships, FinTech, and Ventures for Visa Latin America.
All right. So we're going to go now to explain real quick the format of today's presentation. Basically, we have 6 trends, and what we're going to try to do is present sort of 2 trends at once to try to make this a little bit more open and allow for more audience participation as well. So we're going to discuss a couple of trends, and then we're going to have our panelists share their views about that and their insights. And then we're going to open up the floor for questions. You as attendees can ask questions at any time, and we'll try to address those questions, as I said, at a couple of different points during the webinar and sort of little breaks after we present every couple of trends. And then at the end of the webinar, you also can ask questions, and we'll address them at that point as well. So how do you ask questions? If you look on your screen, there should be a black bar, and there's going to be an icon in there that says Q&A. So you click on that or double click on that, and it should bring up a window where you can type in your question and hit enter and fire it over and send it on over to us. And then basically at different points in time, we'll be addressing those questions. So if you have some now, by all means get started, or if they come to you as the presentation goes along, by all means, please participate. We'd love to hear from you. So as we come next to the next portion of this is our legal notice. It's really long, and it's something that you can read at your leisure. So I'm just going to go over the basic principle of it, which is that the views and analysis presented today represent the views and analysis of America's Market Intelligence, our company, not that of our speakers nor the companies that they work for. So that's important to understand. And the steps that we take in terms of verifying information and liability, that's something you can read on a little bit later when you have the time. I just have to have this in there as part of a thing to make our lawyers happy. So now this brings us to the actual 6 megatrends. And at this point, I'm going to turn the floor over to Lindsay Lehr so she can go over them with you. Lindsay.
Thank you, Abel. Excellent. Wonderful to be here with all of you. We have a fantastic panel to help us digest and dissect some of these trends today, and I hope that you all will submit your questions so we can have a dynamic conversation. So what are our 6 megatrends? We presented these very briefly in our overall Latin America forecast back in October, November. We've given a little bit of a refresh to them, and I'm going to be talking about at a high level, what are the main things we need to be paying attention to going forward in 2020? We have a very juicy and exciting year ahead with these trends. Lots of changes, lots of disruption going on. And as you'll notice, right now in the industry, growth is coming from the conversion of cash to a digital format. Historically, Visa and Mastercard, other networks, and other players fought against each other. But today, it's much more about capturing new payment flows, bringing cash into this digital ecosystem. We have $1.5 trillion in cash at retail establishments annually in the region. A massive prize for those who are savvy enough to understand how to capture that volume. So all of these trends have something to do with cash conversion. these trends also are present and relevant because today we have, for the first time, a truly digitized Latin American consumer. You know, we've been watching this evolution over the past 10 years, and really in the past 12 months, we've seen critical mass develop of certain digital ecosystems, challenger banks, and players who prior weren't really considered so relevant to pay attention to. But now we really have an engaged and digitized customer base who are driving these changes. So that's kind of what is behind these 6 trends. So let's get into the meat of it a little bit here. We're going to take 2 trends at a time so we can find some synergies and relationships between them. And the first segment of the webinar today is talking about what happens when when physical infrastructure starts to disappear, right? Moving from plastic cards to a payment credential, which could be in digital format, and moving from hardware acceptance infrastructure to terminal-less acceptance infrastructure. Looking at trend 1, thinking about moving from cards to credentials. What do I mean by this? So we know that credit and debit cards have limited penetration among the population in Latin America, but nevertheless, we still have 200 million cardholders more or less in the region. So we can say that cards have been very successful among a certain group of consumers, absolutely represent a critical mass that drive significant amount of volume. However, within the past 5 years, we've seen the onset of digital ecosystems that today, as I mentioned, have truly gained a loyal following. We have some regional players, and at the local level, we have examples of payment apps and digital ecosystems that have gained a million users or more even in some of the smaller markets. What's interesting about all of these examples is that they enable some type of payment that doesn't require a physical card. They may require a card on file that is behind the app, a credit or debit card, but the plastic is no longer necessary for these apps. So go ahead and let's go on to the next slide. Similar, when we think about trend 2, terminal-less payment acceptance, we're starting to see QR codes, for example, P2P purchases P2P payments that could eventually start looking like a person to merchant payment, app-based payments, and card-on-file-based payments that don't require a physical POS terminal. Now, important to keep this in context, right? Today, QR codes represent only 2% of all card transactions in the region. So physical plastic cards take up 90%, by far the majority percent of transactions in the region. So when we're talking about these trends, it's important to keep them in context, right? This is the beginning of something that could begin to accelerate. And so if we're looking 3 to 5 years out, we might start to predict, okay, plastic's going out of style. What are the technologies I'm going to need to enable such a lifestyle? But I by no means I'm here to say that cards are disappearing today, terminals are disappearing today. This is a forward-looking projection and speculation. But we are seeing that QR codes and other forms of in-app payments are making their place in the ecosystem through banks, through fintechs, through merchants, etc. An interesting statistic here, Mercado Pago, one of potentially the most successful fintech and long-standing fintech in the region, e-commerce player, in 2019 reported that 50% of their off-platform transactions now take place in physical stores through a mobile POS device and QR codes. And this is pretty remarkable penetration considering they've been focused on e-commerce for 90% of their history. So they've successfully made the pivot into in-store payments. So we have these 2 dynamics occurring both on the payment and both on the acceptance side. What type of implications does this have for us in the industry? And this is really where I want to get our panelists' opinion in a moment. when we think about a card is a credential, right? It simply connects the money in my account to the money in your account. When we do away with that plastic and that goes into a digital environment, what technologies are required to secure that transaction and to make that transaction seamless for the consumer no matter where they're paying? Opens up the question of digital identity, right? Biometrics. Today it's the card number accompanied by your driver's license. Tomorrow it may be a thumbprint, a selfie, facial recognition, voice recognition, and opens up a world of opportunity for banks who are looking to acquire these type of capabilities and fintechs who are offering these type of capabilities to an ecosystem that today doesn't really know how to integrate that so far. On the acceptance side, if we go to the next slide, a key question here is as in-app payments, QR payments, P2P payments, and invisible card on file Uber style payments, as they continue to grow and continue to gain traction and bleed into the physical environment, we have to ask ourselves, if we don't have a physical card and we don't have a physical terminal, what then is a card present or a card not present transaction? These delineations, which we have depended upon to guide our conversation, may start to be less relevant, and that may cause us to think about the industry in different ways. So as the physical terminal gives way to other acceptance formats, we have the ability and the opportunity to incorporate millions of merchants, literally millions of merchants who today do not accept electronic payment, $1 trillion in opportunity for merchants who today only accept cash. And really it's a question of which model, which terminal-less model is going to be most appropriate for them, or if actually a terminal will be most convenient for them. An additional thing that I like to question is, as we have these new entrants coming into the ecosystem, these apps, payment apps and marketplaces, they're becoming a powerful household brand, right? They're becoming verbs, te yapeo in Peru, for example. They're becoming, they're starting to take ownership of the consumer relationship in some instances. So we have to think about, what does that mean for us, whether we're a bank, whether we're a card network or a merchant? What does that shift mean for us as we go forward in 2020? Okay. So, very kind of rapid fire of those two trends. I want to invite our panelists, just at a high level, you guys have had some time to think about this. What are your initial reactions to this analysis?
Well, Lindsay, thank you for the time. So I think you're absolutely right. I think what we're seeing is sort of this migration of physical credentials to virtual credentials. I mean, I like to think about it as sort of this card to cloud migration, right? In the sense that PAN or card numbers basically will be living in a cloud, and that cloud will sort of be able to migrate and move around different form factors. So the credential is obviously, when you think about Latin America, yes, it's mostly a credential that's stored inside the RappiPay wallet or inside Mercado Pago or so forth. But when we look at it universally, that credential that's in a cloud somewhere can essentially live on a bunch of different devices, right? Whether that's a watch, a ring, a phone, a car, and so forth. So I think we'll continue seeing that migration. I agree with you. Cards are not disappearing anytime soon in Latin America. Mm-hmm. And the other point on that is they're really, with the migration of a physical transaction, a physical card onto, and creating that or moving that card to a virtual credential, you've essentially stripped away what is known as the payments experience, because mm-hmm. the act of paying, that transaction just suddenly disappears. You mentioned mm-hmm. Uber, and that's a perfect example. I mean, you really don't think about a payment transaction when you get onto Uber. You don't think about a payment transaction when you order a sandwich on Rappi. You don't think about a payment transaction when you use PayPal's one-touch button. So payments gradually just end up slipping into the background, and they do become invisible, right? Mm-hmm.
And that's actually the most disruptive and innovative payment experience we've seen in the region, is payments becoming invisible.
Yep.
Yeah, and in becoming invisible, you're actually eliminating, a customer experience friction for many people, right? And we all, in the industry, or at least I do, I tend to use always, how bad was the experience, or is the experience, if you get into a yellow cab in any city in the world, and you have to take out your card, and maybe the taxi driver doesn't accept. With a credential in a cloud or in a wallet, however you want to look at it, that experience just completely is seamless, right? And I think creating those wow moments where you don't realize you're actually paying for something is where a lot of things are heading, right?
Yeah. So I think what you're looking, the phenomenon you're looking at the payment industry today, it hasn't started with payments, right? So I think we started to live a digital lifestyle, for 20 years, I think, maybe more. And what we're doing right now is really kind of a catch up, right? So we're really syncing the way that we live and the way we pay. I really like when you refer to it as a payment, as a lifestyle. It is, I think we're adjusting the way we pay as a lifestyle. And yes, right? So I think from invisible payments to more sophisticated, fit for purpose POS, I think we're going to be seeing like a plethora of means of channels, of form factors, right? But I do believe that, the bases that we are building in Latin America are quite strong, right? So I think there is a strong investment in the industry in tokenization. There's a strong investment of the industry in authentication, right? So both, and when I say authentication, both the rails, right? So to authenticate, and also the methods, right? So investment in active biometrics, in passive biometrics, in a way that we can, as we migrate all these credentials to the cloud, we're able to secure them. And more than that, I think consumers need control. I think they need control. They deserve control, and it's important that they are entitled to choose where the payment credentials will go or not in an electronic environment.
So fantastic. Something that comes up, and I get asked this question a lot, and it's a bit counter, like the fact that invisible payments are the best payment experience is a bit counterintuitive, and banks and perhaps even you guys could feel worried or threatened about losing brand recognition. If I don't know the payment is happening, I forget what card I have on file, I forget what payment method it is. How do you respond to that potential anxiety, or is that a question for you and for bank partners of yours? Am I losing my brand identity?
Yeah, I think it's something to consider, and it's not just us. I think as the median and the channels where we communicate to consumers and the attention span of consumers are really getting shorter and shorter. I think it's a time for brands to really rethink how they approach the consumer, right? And it does need to be like a 360 approach, right? We are definitely looking at it, right? So I think one approach that we launched recently is really the experiential aspect of the brand, right? So we have our Sonic signature, we have our Sonic brand, and these are one of the ways, right? So, but I think we should always put the consumer like really the center. What is the type of recognition, signs, or branding we should put in front of the consumer that does not just like cloud the vision of the consumer, but really is representative, is useful for them to recognize a strong brand, a brand that they trust, right? So I think it does challenge, I think, the industry in general, but by no means I think it's just a challenge for us in the industry. It's just a challenge that we, as a new opportunity that we see in the world.
Mm-hmm.
Yeah, and I agree with Alex. I mean, I think if we take a step back, sure, all our products, solutions, technologies we're investing in are critically important, but fundamentally, we are moving the most intimate thing for people, money, right? And without a question, even today, with all of the innovation and so forth, our brand is our greatest asset, right? Because visibility in things of, the brand essentially resonates with consumers, helps them understand that it is trusted, that it is secure, that it is accepted, and so forth. So I think, to Alex's point, it's about finding ways to counterbalance situations where the actual brand may not be visible as much anymore, right? Because when you have a card on file on any app, you're not actually taking out a piece of plastic and visually seeing that brand. But at the same time, balance that out with, with new channels of getting to consumers and making sure that that brand association is not lost, across the different experiences.
Great. And okay, thank you. I like what you said, brand is our greatest asset, because at the end of the day, when consumers put their trust in something, they're putting, all they really have to go on is the brand and what that logo means to them or what that messaging means to them. So what are some of those alternative channels or alternative ways that you can promote and establish that brand relationship if it's starting to disappear, if it's starting to lose visibility to the consumer?
Yeah, so for that perspective, right, there's many things we're doing, right? So as I mentioned previously, I think we're starting to associate the brand not just with a visual signature, but also with sounds, with experience, right? I think careful, and maybe as a consumer, you may not notice that, but since we started with wallets, or we started working with card on file, there has been a very careful, I would say, crafting how the brand is represented, and not just for the sake of the brand itself, is the trust that it brings, right? So we're looking for there's a whole lot of thinking for every type of device, right? So there's a device, let's say a fitness tracker that may be doing payments. How do you present the brand? Is like a small logo, is a small icon, is just a message, right? So in a way that is useful for the consumer, and of course, less intrusive as possible. It's something that, as I say, I think that we need to be very concerned when designing products, really just to add, value and value to the consumer. Exactly.
Right. Okay. Great. Wonderful. Okay, Abel, let's take a question from the audience.
Okay, let's take a look here. We have one from Alan, and the question is, even though a player like Nequi, owned by a bank, is off to a good start in Colombia, would you agree that it's highly likely that the dominant players in new digital payments will be startups, including Mercado Pago?
Great. So yeah, I think the essence of the question is, we have some bank-owned digital initiatives and that can be off to a good start. The person is kind of hypothesizing that it'll be the true the ones independent from the banks that will be the most successful. What do you guys think about that?
So I think, look, this question always comes out, right? Because it's always, a couple of years back, it was the traditional banks saying, well, the fintechs are sort of the barbarians at the gate, right? And what you've seen, I think, over the last probably 18, 24 months, is an openness of established financial institutions to adopt, in some cases to partner, in some cases to buy some of these emerging technologies. I think the most important thing is that, independent if you consider an app or a solution, a fintech versus homegrown within a bank, the important thing is that they're both driving to a really important point, which is digital inclusion, right? Everyone talks about, growing the digital ecosystem in LatAm and around the world. I think what banks are doing is very good, which is, innovating sometimes by design or by default, but innovating and ensuring that there are electronic platforms to get people into this digital ecosystem. Now, we always say, or I always say at least, the one that is able to provide the most consumer value and the best customer experience is the one that will win. And it may be a bank, absolutely, right? We've seen cases in the Nordic countries and in Europe where banks actually have amazingly powerful platforms, right? So I don't think, we should automatically say, well, it's going to be the big established fintech or digital platforms out there. Banks have no chance. I think on the contrary, there's a sizable opportunity to get a lot of people, digitally connected. And if banks are making those investments and building products like Nequi or Match in the case of Chile, then I think it's all heading towards a direction that we all want, right?
Yeah, I have a similar view, right? So I think there is there's quite a bit of, depends on the country, depends on how we measure it too. We have an unbanked or underbanked population between like 50%, 80% in some countries, right? So I think there is this monumental clash that a lot of people anticipate or dream about. I think there's a lot of opportunity, right? So in terms of exploring new consumers, bringing new consumers into the financial systems, allowing them just to have a financial footprint, right? So I think what I've seen, at least what I've been observing, is that a lot of the successful players, the successful fintechs, they're not playing like in a really strongholds of banks. They're expanding the offer. They have either a different offer in terms of experience, or a different offer in terms of market segmentation, or just a complete different offer. It may be the first contact that a consumer has with the financial system. So I think this overall is just really, really healthy. I see like the fintechs coming in, pushing the envelope, creating like different propositions, but at the same time, I see like really established, strong banks like really building on that strengths and creating their own apps, right? Own apps, own value proposition, I would say, not the app itself, right? So if you look at even from a mobile perspective, in Brazil, some of the most used apps outside of the chatting social network, they're banking apps, right? So I think it is a healthy evolution that the industry is taking. I don't think that there's still a lot of blue waters to explore for everybody. That's our view.
Yeah, and I think it's more important than will it be a bank app or a fintech that becomes dominant is, like you said, Arnoldo, who is actually offering the best user experience and the most value to the customer. And at the end of the day, my opinion is that no one closed loop network is going to become dominant. It depends on each market, the landscape in each market, and the banks, at the end of the day, they will continue to depend on the infrastructure that the banks have developed. That's a whole conversation we could have in a whole webinar. But the fintechs in many cases have the better user experience, they have the agility, they can be more innovative, but they all revert back to the banks at the end of the day.
Yeah, I have one point on this as well, Lindsay. What I'm seeing a bunch of times is that there are several large banks in the region that, besides really either invest in their own infrastructure, they may be doing a spin-off for themselves, or sometimes they're going directly to these fintechs that may not be interested in being a financial institution, and really either acquiring the experience or partnering with them to provide their experience, right? So I think it's a combination, right? So a lot of times, even for our brain, we try to put things in boxes, but I think what I see is really a continuum, right? So in some cases, like they may be competing. In some cases, maybe we're gonna have another provider, another fintech that works as a service provider and provide an experience that the bank, it's easier for the bank to partner, right? So there's a full continuum of partnerships that are happening, including LAC.
Great. Okay. Fantastic. All right. So let's continue the discussion here. We'll move on to trends 3 and 4. Abel's going to give us a tip for the audience before we go on.
Yes, we've gotten a couple of really good questions, and we'll try to get to all of them, and we're gonna have open the floor to other different points in the presentation itself and at the end. So if you want to ask a question, as a refresher, if you got here late, just so you know, if you look at your computer, you're going to see sort of a horizontal black bar, and on there you're going to see the icon Q&A. You click on Q&A, it pops up a window, you type in your question and enter, and we'll receive it. So if you got here late, that's how you do it. You just click on that Q&A icon. So let's move on to trends 3 and 4.
Perfect. Okay. All right. So, all of these tend to be related, right? Trends 3 and 4, acquiring an acceptance revolution. I'll get into what that means in a second. And of course, race for the super app. These are related because as we have different acquiring models and different merchant payment acceptance models coming in, these are being done very often by the same companies who are vying for a title of super app. So we have these different payment facilitators, payment gateways coming in to offer alternative models for payment acceptance, shaking everything up. So looking a little bit in detail here at trend 3, an acquiring and acceptance revolution is taking place in Latin America. And this has really been going on for several years. It has been accelerated a little bit in the past year. What we see is incumbent acquirers, due to regulatory and market pressures, opening up from their monopolistic or closed market tendencies. We see this happening in Colombia, Peru, Chile, and Argentina. This is very exciting for everyone in the industry, most of all for the consumer, right? Because this opens up the possibility for new entrants, new models, greater competition, which essentially will improve service and push fees downward. So both merchants and consumers benefit. This is a slow process. So this is not one of the more disruptive trends. This is more of a slow moving structural change happening in the industry. But what I think is really interesting, if we go to the next slide, is the fact that simultaneous to traditional acquirers being required to open up, we have the rise and the onset of independent digital ecosystems that control both issuing and acceptance. So we have, a digital wallet closed loop system that issues a credit, a credit, debit, or prepaid card, may have a wallet and issue electronic money. So they have that consumer relationship. They offer other types of consumer products, including loyalty, rewards, savings, P2P payments, etc. May even be calling themselves a neobank, offering a digital bank account. At the same time, these same companies are touching the merchant side. So acquiring merchants or enabling payment acceptance via QR code or some other type of acceptance mechanism. And so they're, creating this closed loop system, touching both sides of the equation. And these are, because they're not banks, they're not subject to the same regulatory scrutiny, and they're being permitted to operate similarly to incumbent acquirers, while those guys are being forced to open up. So it's a fascinating kind of cyclical process we're observing. And, in a moment when we talked with our panelists, I really am curious. This is early stages, right? These closed loop digital guys, Mercado Pago or Rappi, for example, they're not at all at the same scale as a traditional acquirer is. But do we need to be concerned about potentially replicating the same conditions that we're currently trying to get away from in the card issuing and acquiring space? So we'll get to that question in a second. Secondly, when we think about the race for the super app, these same usual suspects kind of fall into this category. And this is maybe the trend I get most questions about. Who will be the next WeChat? Who will be the WeChat of Latin America? And I think that's actually the wrong question. WeChat evolved under a very particular set of circumstances. Latin America is very different structurally. And importantly, WeChat evolved from messaging, an activity that people do every day, no matter what your socioeconomic status is or your level of digitization or financial maturity. It's been a little bit different in Latin America. The race for the super app has evolved around these 4 verticals, starting off with mobility and delivery, followed by commerce and payments. And we see apps proliferating to fill out this map. So we have a bit of fragmentation here, and without interoperability being enabled, these will remain fragmented, and fragmentation is difficult. When you have fragmentation, it's difficult to become dominant. So I think my opinion is that we're going to continue to see a similar type of fragmentation, and even potentially more digital players being empowered to meet consumers' needs in different ways. The one area where these companies have been very successful and have really blown other competitors out of the water is in user engagement and loyalty. And I think we can all learn a little bit from these companies on this front. So if we go to the next slide, an important lesson from this race for the super app comes from, what are these companies doing to engage their customers? We think if you're a Rappi user, especially a Rappi Prime user, you may be using your Rappi app every day, multiple times a day, definitely multiple times per week. That is likely much more often than you're using your banking app. So what these guys have done well is created an ecosystem that is useful for you on a daily basis. And the more engagement you have, the easier it is to pivot into other areas of that customer's life, like banking and payments. So Uber is a fantastic example. They have launched Uber, then they launched Uber Eats. Now they've announced the launch of Uber Pay. So with all of the data they have, the loyalty they have, they can easily, well, we'll see if it's easy for them to pivot into retail payments at restaurants and other things and other establishments. The other thing that they have done so well is connected to consumers at an emotional level. Because they are so entwined in their everyday lives and their everyday habits, these companies become integral to your life. And they have done that because they reflect the values of today's consumers back at them. Companies like Amazon, Uber, and Rappi, they all know exactly who they are. They know exactly what their value is, and they reflect what consumers are looking for in today's society back at them. Speed, convenience, value, trust, fun, adventure. And Nubank is another wonderful example. Their marketing is so anti-bank. It has nothing to do with finance or payments. You go to their website and you see young people adventuring. They spark this spirit of limitless possibilities that today's consumer wants to embody. And they will be continuously drawn to brands that they can identify with in that way. So in my view is that's a key lesson we need to take from these digital players who have that closeness to the consumer and understand where they are today and where they want to go, and connect with them at a level that's far beyond their individual products. Something for all of us to learn from. If we go on to the next slide, we can go to our panelists to, first of all, I want to get your guys' take on kind of this hypothesis I have of these closed loop ecosystems starting to emulate or potentially emulating the same scheme that we're trying to get away from with the traditional acquirers. Is that totally out there? Do you see something in there? Or what do you guys make of that?
Yeah, so I think, there's like a balance that you always need to strike, right, between innovation and having a level playing field and having the consumer protected, right? I think there's no doubt there are definitely, I would say, when you have a platform that's growing in popularity, you see some attention drawn to that. But what we have seen in Latin America over the years is that either through I would say competition, or to like market dynamics, or the market regulation laws. Like there is I think the field tends to be leveled, right? I do believe that this, whatever imbalance you're gonna have is gonna get corrected, and I don't think that the players are looking to like be out there out of the law. Or with a different type of standards, right? So there's a system behind that favors a lot of times, or many times, or most of the times, you being in a level playing field. And I think that even the imbalances that you may see, that you may be referring to, they will be temporary. I don't see that as being a big issue, at least not something that would last for a long time.
Okay.
Yeah, and I think also that, Lindsay, as you alluded to, sort of the opening up of markets is going to significantly bring down sort of, or actually is going to change some structural things for the better, both on the merchant and the consumer side, right? You have now markets that were a little bit closed in the past. You mentioned Colombia, Argentina, and so forth, and now you're seeing sort of multi-acquirer markets. But I also think what will be interesting to see is the entry or potential entry of some of sort of the global players out there that are going after segments traditionally not served or underserved by the traditional acquirers, right? So you think about Stripe comes to mind. If you look at sort of the growth of just internet companies, software companies, traditional acquirers have not been the best at going after that type of quote unquote merchant, right? So I think that'll be an interesting thing to watch. And also, I think competition tends to eventually favor, in this case, consumers and merchants, right? Because companies are looking to build the best product or add the best services. What'll be interesting also is to see how traditional acquirers react to new players that are coming in with a stack that has much more value-added services for, in this case, for merchants, right?
What are some examples of those, Arnoldo, that come to mind of the value-added services that they might be bringing?
So I think about Stripe, right? And I think everything from, the ability for Stripe to provide merchant with a simple API to issue cards if that merchant wants to begin issuing their own cards, right? All the fraud and the risk tools. In some cases, like Square, for example, they provide a merchant acceptance platform, but they also provide Square Capital, so lending based on transaction volumes, right? So it's more about, merchant acquiring is sort of the table stakes now. It's all about what additional value is your stack bringing, right? And I think it'll be interesting to see how traditional players react and hopefully evolve to meet that change in the industry. And to your point, it's a very slow moving change, right? This is not something where in 18 months the acquiring landscape is going to be completely different, right?
Yeah, and Lindsay, I think, and I think it's related to the first trend you mentioned, right? I think let's look at the countries where we have this opening of the market, like first, right? Brazil, Mexico, right? So what we've seen is the opening was followed by a very strong modernization competition, right? So that gave access to different business models. It gave access to a really improvement on the service, right? So I grew up in Brazil, and we used to go to any merchant. The merchant had like 4 terminals. Well, that's
right.
Look at that's just inefficient, right? So it's inefficient. It's costly for everybody, right? So I think as we start to look for ways to compete, I think the human brain start to be smarter, right? So I think it's a trend that we see in Brazil. I think we've seen a lot of interest dynamics in Mexico. I think everybody in these countries, the environment itself, the economic environment could benefit from this additional, I would say, input of energy in the market.
Mm-hmm.
And the last point, the last interesting point is, looking at soft POS and MPOS and all those things that enable essentially any device to become an acceptance device, right? But it'll be interesting also to see, how those things evolve in some markets in Latin America over the coming years.
Yeah. It brings to mind companies like Stripe and others. They're essentially, they're very different from these closed loop digital ecosystems that we're talking about, able to offer a suite of services that merchants need to enter new markets, to enter new verticals, to speed time to market. I think that's a great point and something that it's behind the scenes, but will have big implications. One other question that I get asked a lot, and I'd love to hear your guys' input on is, so we've seen these super apps, many of them in an effort to gain market share or gain a mass of customers, both consumers and merchants, kind of go to market. We see this with neobanks too. Go to market with zero fees, right? 0% MDR for merchants, heavily subsidizing consumers at the point of sale with discounts and promotions. How long do you see that strategy being viable? At what point will they have to start monetizing, and what will be some of the strategies we can expect to do that? And will consumers and merchants tolerate that after they've become exposed to a zero fee environment?
I think it depends on, just playing devil's advocate, it depends if you're a public company or a private company, right? Because you, as a private company, obviously you're burning through investor cash, right? And you're trying to hopefully find product market fit before the cash burns out. But I think if we generalize a bit, I think it's sustainable as long as obviously overall margins are making sense. There's, as I said, product market fit. And more importantly though, you know, subsidizing is sort of a poison of sorts, right? Because particularly early on when that becomes the core value proposition for a consumer to use your product, right? And this happened many years ago, and it continues to happen with this whole freemium business model, right? Where companies, regardless whether they're in financial services or not, launch platforms under a freemium model, and all of a sudden sort of price points adjusted and you had a massive amount of churn. So I think it's very, it's very dangerous. It's a good way to sort of build a critical mass, but then you have to have a solid business model behind it, right?
How do you pivot? How do you evolve from that, right?
Yeah. So if you have something to, buttress your margins, then that could be sort of quote unquote your lost leader, right? It's an acquisition channel, and then you sort of graduate them to some of the other products and services that actually monetize a bit better. So again, it's just sort of how I tend to look at it.
Mm-hmm.
Yeah. So I think, if you look at the product market in general, right? So introductory promotions are as old as product marketing is, right? So and when well designed, I think those promotions, discounts, zero fees, I think they are designed to influence behavior, right? So I think human behavior tends to be very sticky, once really ingrained. I think the judgment is out, right? So will that initial experience, right? So I think when you go deploying a product in the market, we need to at least, the first challenge is that the consumer try, they know how to use it, right? They want to repeat it, and then they become a customer, right? So I think the judgment that's out is, will this introductory promotions last enough, right? And will be an important factor or not on the consumer adoption. If the consumer is just adopting because it's free, it gets less sustainable. But if there is a value, and I think I insist a lot, and we insist a lot on this point of, are we adding value? Because if the consumer doesn't see value, and they just see the promotion, their loyalty is gonna end when the promotion will end, right? So in summary, the question that's out is, will the period of trial really influence behavior in a way that sticks? And that's, I'm also curious about that.
Mm-hmm. Great. Okay, Abel, what do we have from the audience?
Well, we have a question here about super apps from Renato. So he's basically saying most super apps are currently offering the same features to its customers, and he wants to know what we would believe is a big differential to succeed in this market with a super app, I'm assuming.
Okay, yeah, it's true. I mean, we see a lot of the same features being offered from super apps. What do you guys have an opinion? What is the key differential that will make the difference? Yeah,
so I see a lot of features, but I think your graph shows it really well, right? So they're playing different strengths in different verticals, right? So I do believe that, we've been in the web, went through the same phenomenon, right? So a lot of the features that make sense, they become standard. But at least what we're seeing in Latin America, we're not seeing the super web like a WeChat that has like a specific environment with the grow. We're not seeing that in Latin America. We're seeing like some, and I could not picture better than your graph, is there are some apps that are playing better in some spaces, and they're incorporating best practice for usability, right? So that's the way I see. I do personally, I do believe in that approach, right? So they're fit for purpose, they're enhancing, they're offering with experiences, they'll be all encompassing. It's harder, right? So when you don't have a protected environment, you're gonna see a lot of competition for specialization. That's my view, at least.
Mm-hmm.
Yeah, I think if you take a look around the world, right? If you take a look at Meituan in China and WeChat and Kakao in South Korea, if you sort of lay them out, they all offer the same things, right? It's food delivery mainly. It's some form of micro payment, P2P, in some cases a money market fund. They offer ride-hailing services, and then sort of a plethora of sort of long-tail services, booking, hair salons and everything else. I think the interesting thing in Latin America is we still haven't seen, and I don't think we will see a WeChat because, as Alex said, I think there was regulatory arbitrage in China that permitted the success and growth of WeChat, right? But, when you think about apps and how they become super apps, they typically have not tended to start out of a financial service environment, right? What you've seen is companies that have built sort of products or services that have been high frequency but low margin, right? So food delivery, ride hailing, and so forth. And then they're now making this slow transition into high margin, low frequency transactions, right? So I think it'll be very interesting. I think ultimately the super app to me, and someone asked me the other day, what's your definition of super app? And I told them, well, the word super app is going to be Merriam-Webster's word of the year, because I hear it now everywhere, right? And I said, I said, well, to me, it's an app that has the majority of what I call share of life, right? And it's kind of like Coca-Cola has share of stomach. And it's an app where most of the daily transactions, whether they're financial, whether they are leisure, whether they are food related, ride hailing, whatever, is concentrated on one platform, right? And it'll be very interesting. I believe right now there's a couple apps in LatAm that show some good signs. Obviously, Rappi being the biggest one. But it'll certainly be interesting to see if we can replicate in Latin America somewhat of a success case as we see in Southeast Asia, South Korea, India, and so forth.
Right. And of course, when you try to pivot to another vertical, you run the risk of that's difficult, spreading yourself thin, detracting from your core value proposition. It's tricky to have that share of life and do all of those things well. Typically things get successful in a particular niche. So we'll see that evolving.
I think that at some point, Lindsay, and we've seen this in other industries, that goes back to how the consumers behave and prefer to interact with apps, right? In some cases, they go very, very thin, very specific. And some cases they go they're looking for a one-stop shop. As humans, we are so different. It's really hard, to replicate this massive, I would say, audience for one place that doesn't do 100% of the things super well, but serves our needs and really satisfies everybody. So I do believe that at least in Latin America, with the diversity of countries or people that we have, you're probably going to have a mix. That's and I said the judgment is out, but that's the way I see it.
Got it. Okay, great. So let's continue on to our last two trends. These two are related to, we've been talking about fees a little bit, but bank accounts becoming a payment method and fees trending towards zero. We've touched on these a little bit. These are, in my opinion, the two potentially most disruptive and interesting trends. So let's take a look. Bank accounts becoming a payment method. This is the one that my two panelists probably tremble about the most from the card networks, potentially. And this is, again, a long-term trend, and potentially the most has the potential to disintermediate some of the structures we have in place right now. We know that financial inclusion has been a priority for everyone over the past several years. The payment instrument that has made the most gains is the bank account, not the credit card or the debit card, but the bank account. So when we look at this chart, this tracks the net change in penetration from 2011 to 2017. And on the right, we see the average for the region. We can see that bank accounts have made the most gains. The problem, of course, is that a bank account in and of itself is not a payment method. And so you may have a bank account, but that doesn't enable you to participate in the digital economy. Or making digital payments in the physical world. So Central banks and clearinghouses and private initiatives across the region are currently working on building the infrastructure to turn bank accounts effectively into a payment method using real-time ACH. So again, we can go on to the next slide. We see this happening in almost every market, again, from central banks, from private banks, from fintechs, even from merchants getting involved. What I find interesting about this trend, which, you know, in the next 12 to 24 months, I think we'll really start to see some true implementation that is interesting and impactful. What is most disruptive about this trend is that it has the potential to achieve true democratization of payments. We hear this term thrown around a lot related to financial inclusion, but when I can pay my friend for dinner last night, the babysitter, my lawyer, make an e-commerce purchase, pay the grocery store, the movie theater, pay my gym, and the taxi, and buy an airline ticket online, all using the same payment method, the same app, at any time of day, any day of the year. That is what, all of a sudden we don't have such a distinction between a P2P and a P2M transaction. Now that's a long-term vision, right? When things become that harmonious and that homogeneous that I can pay anyone, no matter who they are, large or small, using the same payment method and the same interface. But that is where we are potentially headed, and that is the goal for a lot of folks who want to see true interoperability and true inclusion. That is what true inclusion looks like. The question, of course, is with real-time ACH, we have not yet developed the protocols and the standards and the agreements to handle chargebacks or disputes, fraud, merchant services that complex merchants with complex inventory and POS systems integrated together require. And in those situations, the card networks play a vital role. So developing these merchant services and the rules around liability and responsibility is still very far from being a reality. So we have opportunity to come into this conversation and guide the development of these standards and protocols to make sure that everyone benefits at the very early stages of this trend. Okay, so going on to the next. Our final trend, again related to bank accounts being and real-time ACH being a payment method, is again fees trending towards zero. We've talked about this a little bit. Bank accounts, when you remove third parties from a system, all of a sudden things are more affordable. And we're seeing, separate from real-time ACH, we're seeing downward pressure on fees both for merchants and for consumers. And as we take steps towards ultimate interoperability, as Arnoldo said at the beginning, the payment starts to disappear. And payment all of a sudden transitions into becoming a utility, something that we use every day, something that has been incorporated into our lives, we take for granted and probably don't pay that much money for. So when that happens, we in the industry need to think about, okay, what is my core competitive advantage and how can I monetize and take advantage of that to the best of my ability in this industry that is realigning, reconfiguring, and new monetization and revenue models are being introduced, and my traditional revenue models are being challenged. Okay, so let's go on to the next slide. This slide is potentially, this is a very interesting slide for me. I love to present this slide. It has to do with once payments become a utility, right? Become something that no longer has so much value in and of itself. We're thinking about the other value-added services on top of that payment. Again, what we need to address and think about, what is my core position in this ecosystem? In any utility network, you have the rails that provide the connectivity, and you have a player that has interface and connects with the end consumer. More and more banks are being nudged toward that rail, not just card networks, but ensuring the stability and the security of the network for payment to actually happen. More and more, fintechs are being nudged towards taking over that interface and taking over that consumer relationship. Both of these roles coexist and are complementary and need each other. So all this talk about fear, a competition between banks and fintechs, we ultimately have a collaborative relationship model here that we simply need to embrace. And as we think about new monetization strategies with fee revenue coming under pressure, we can think about, obviously, the new global currency, according to many, is data. And banks have a lot of it. Now, how do we monetize? How do we analyze that data? How do we make it valuable? How do we monetize it is the question of the day. How do we incorporate technology that will enable us to do that? And how do we position ourselves in the industry to capture the data that I have access to and then share it with others for a fee or not? These are the key questions we all need to be thinking about as we go forward in 2020 with all of these changes taking place. And really, you know, the title of this slide is "Get Paid for What You Do Best." My vision, what I see is that a lot of players in the industry are trying to do everything and maybe wearing themselves a little thin. So reminding ourselves, what is my core value I bring? And making sure everything I do brings value and isn't simply trying to be digital or be innovative, but actually bringing value to the consumer or the merchant or whoever my customer is at the end of the day. Okay.
Yeah. So.
Yeah. So let's go on. So Alex, go ahead with your thoughts.
Yeah. So it's funny, right? Because I think when you describe like some facts, I think even the slide that we show with the statistics, I think we've seen the same slide, but I think my perspective is a little different. Right? So when I look at that slide, if you pay attention that, you know, the countries where bank accounts are not bank accounts are not winning the war, if you say that, those are countries that already had like a major waves of bancarization. Right. So if you look at Brazil had major wave in the last 20 years of like an effort, even from the government, distributing benefits. So those they brought, like, you know, in a very, I would say, rudimentary way, they brought to the financial system. Chile is the same thing. Mexico doesn't show up there, but was very similar. So there is a life cycle, right? So we have, like, you know, from that slide, almost half of the population still doesn't have access to banks. They will. But they don't migrate directly to credit, right? So they have a bank account and then they go to an ATM, right? And then they decided to use debit. And then maybe when they get comfortable, they use credit, even if it is small. So there is a progression. So I think, you know, the bottom line is that that progression is healthy because you're bringing more people in the ecosystem. That's number one. But it's very naive to think that people are going to replace all use cases, because cash is flexible, right? So cash serves a lot of use cases. It's getting challenged by digital use cases, but cash is very flexible and has many use cases. It's very naive that we say, okay, it's either use cash or go to credit and debit. Right, so there are, like, I think between like that entry level, your first day with a bank account to debit, I think depends on the market. Yes, I think that some markets will go with debit because it will not make much of a difference. Some markets have something between, connecting ACH and other methods, right, appropriate to the actual use case. Right, so I think though these are a little bit of a distinction that I think we have to look at. And if you are to capture these new flows, we need to be looking at this experience. I don't think that the service level for each just because electronic is going to be the same. No, credit has its proposition, debit has its proposition, ACH has its own proposition. And again, depending on the market where it makes sense. So I think we'll be seeing this a lot. This gets reflected, in my opinion, with fees, right? So I think the type of service level that you provide in each one of your electronic tiers of payment will be reflected on the amount of work that you do, if it has finance included or not, if it has additional service, added value service, if you expect a chargeback. For example, if I'm sitting in a restaurant and I give you $5, I'm not expecting you to give me back. So what's that equivalent in the in the electronic world, right? So I think that's,
I think that analogy.
Yeah, I think we'll get into that. So I don't quite agree that, yes, the bank accounts will take over. I think it's part of making the financial system more democratic. We're going to find different ways to enable that digital payments. And I don't quite agree with the zero fees either, right? So I think as we become more efficient and we bring more a greater critical mass to the industry, I think benefits like financial benefits and competition as well will adjust, right? So we see market demand, and I think this will adjust. That's the perspective. I think we're seeing the same thing, but I do believe that market forces will still have like a strong force on that.
Yeah, and I agree. I think bank accounts. Lindsay, you mentioned sort of this is what, I don't know if the exact word, but what keeps the networks up at night, right? Sort of I do think that bank accounts, the growth in bank accounts we're seeing is incredibly healthy. And I think it's a benefit to the ecosystem because whatever the means is or was to bring in these people into a banked environment is really, if you think about, a series of steps to get these people into this whole digital ecosystem, this is fundamentally that first step, right? Getting them into the quote unquote formal system.
Banking
I think financial inclusion, I've heard of, I don't know, hundreds of financial inclusion initiatives over the last number of years, and companies, in fact, that have started out with financial inclusion models, and they realize it just isn't that easy, right? It's educating people with benefits. I mean, it's a lot of things. So I think whatever means you can get people to have a banking relationship is really the first step. And yes, there may be use cases where paying with your bank account makes sense, but from a network perspective, there's a series of other value-added services that run on the network, which merchants, would not be able to access, which consumers and the banks that issue their cards would not be able to access, and so forth. So I think it's a great path. It's a great initial path, but I think there's obviously room for multiple payment options. And again, I really go back to what is the best experience for the consumer, right? And that will drive that will steer where the payment methods that will surface to the top in different use cases.
Okay.
Yeah. And then Lindsay, just saying, you said that the ACH keep the networks up at night. I would say for us, at least, it's not the ACH. ACH is bringing more people into the financial system. What will keep me at night is that we need to do a really good job on user experience, security, privacy. So people that get into the financial system don't go to boleto. Like in Brazil, we have like people using boleto for
so they feel secure in the digital environment.
And it's horrible, but it's simple, right? So we need to do a better job. So as you get, at the first contact with digital payments, you do like you do in a way that people like it. It's easy to use and people feel secure, right? So there are the thoughts that keep us at night. At least a Mastercard. So, and I think not just a Mastercard. I think the industry in general. I think we'll look into that. I'm talking to banks. I'm sure that Arnoldo have like different discussions with his clients as well. I think that's our joint effort.
I think that's a key point. Is if you're offering a digital experience, making sure that it is perfect and seamless and safe every time, so that those customers don't bail and go back to their analog ways. Absolutely. Okay, thank you guys. So we've come to the end of our main content. We're gonna take a couple questions. Oh, I'm sorry, I forgot about my conclusion. Thank you, Abel. Okay, let me just, no, it's okay. Go comment quickly on this slide. One last thing I wanna mention, you can skip this one, go to the next. We've talked over and over about, if you can go back one slide, please.
There we go.
This one, thank you. We've talked over and over about consumers ruling, right? Consumer experience at the end of the day, and that's what's gonna drive the industry. And I wanna remind everyone that we're in the era of the empowered consumer. Okay, so through the internet, Latin American consumers now have more opportunities and possibilities for their lives than ever before. Okay, gig economy work opportunities, study and educational opportunities, international e-commerce consumption opportunities. There are more options for consumers than ever before. And so people are able to expand their dreams for their own lives. And so the payments industry, essentially what it's about is unlocking those opportunities. So, you know, we went back to at the beginning of the session talking about invisible payments, getting out of our own way and letting the payment do its work for the consumer to unlock that potential. That is what I think will drive success, drive loyalty, drive brand recognition. And you know, just making sure we're delivering value and something real to consumers so that they can go get on with their lives. Because at the end of the day, people don't really care about payment methods. They care about accessing that product or service that they're looking to consume. We can understand that, then we'll be aligned with the consumer as they go forward. Okay, excellent. So let's take a couple of questions from the audience. To wrap up, just a review of our 6 megatrends. We can see these on the screen. We can kind of keep these here for everyone's refresh as we go to some questions from the audience. So I'll hand it over to Abel.
Sure. Actually, I saw one that was about the Caribbean market. It was from Jared. He was saying that in the Caribbean they get grouped together with Latin America, but it seems to be a region that's lagging behind in terms of payment acceptance. So he was interested in the thoughts of the panel as far as that market and sort of what's happening there.
Great question. We don't typically cover the Caribbean because of its difficulty in addressing. So do you guys have any thoughts on, high-level thoughts on the Caribbean?
Yeah, there's, I think it's, for example, for just the geographical fragmentation does pose a challenge, right? So, but it also, it poses an opportunity to improve, right? So it's an explored area. I will not say lag behind, but I think usually as we go to these markets, it tends to take a little longer, right? So we are, for example, doubling down, opening offices in the region. It's something to watch, right? So I will not say that, you know, things, the new technologies, new trends come as quickly as come to Brazil, but also it's a good fertile environment to test new concepts, right? And we are looking to a number of opportunities where we have like really the newest technology deployed in the Caribbean, even just because it's like a small environment, a small ecosystem, right? So it has like a little bit of both. Like it has the bitter of not getting like the biggest things right up front, but also gives a good environment to smaller trials, right?
Yeah, and for us similarly, I mean, it certainly is an important region. You know, we same thing. We've opened offices there as well. I think you know, when I think about digital partnerships and the fintechs and all of that stuff, sort of that my team looks at. The reality is there's still not a lot of momentum there, right? But in the core business, I think it's, you know, obviously it's a very healthy market for cross-border transactions, right? Just because of the nature of how the Caribbean is set up. And I believe there's still, you'll see in some pockets like Dominican Republic, some interesting companies beginning to form around cross-border e-commerce. So things around that. I think it's, to Alex's point, yes, it sometimes doesn't have the priority as other sort of markets like Brazil, Mexico, and Colombia, and so forth. But it is nonetheless, you know, provides a great opportunity for us to see what's out there, to develop partnerships locally, and to continue helping, you know, the clients really access all of that technology that they're seeing across the Caribbean, right, in sort of mainland Latin America.
Yeah, and Lindsay, just to one point on that, I think one benefit that a lot of times we have with the Caribbean of not being first is that we have less trial and error. When technologies arrive there, they are more mature, right? So, and this helps the institutions too, because they're smaller, they don't have to invest as much, right? So there's, you know, there's a little bit of balance on that perspective, but you know, the region for sure is really important.
Perfect. Okay, I think we have time for one more question. Abel, what do we have?
Sure, this one is from Javier, and he's basically saying, do we need in LatAm to start having a different regulator for payments? In the UK, it's like that. In LatAm, I see that we are ruled by central banks, and this may not be the best for the user. So his question is, what do we think, or what does the panel think about that situation?
So are central banks the best regulator? And do we need to move to a different model?
Yeah, so Latin America is very, very diverse, right? So it's really hard to say that Latin America, any model fits Latin America. I think there is, some really like hard trialed experience on change and on structure, right? So I would not say that, it needs to be different. I think the markets are evolving, right? So in terms of the regulators, the governments are evolving in terms of technology. I do see some of the some governments in our region take a really strong stance on being technically advanced and learning, right? So I think there's no one size fits all. So I'll not create the rule. I think the markets will find its own appropriate ways.
Mm-hmm.
Yeah, and I mean, I've been working in the region for almost 20 years now, and the reality is I've seen a very good shift in mindset from regulators, over this time, right? And I think, look, I think regulators want to create innovation, but at the same time, they have to do their job, right? Which is ensure sort of fundamentals of the financial system are well maintained, right? Particularly anything that has to do with taking custody of people's money and how that's going to be governed, and things around money laundering and all these things. And people tend to look at that and say, oh, the regulators aren't open. But I think it's quite the opposite. You've seen obviously in Mexico, all of that effort that they put forward in creating a fintech law. And we saw, I think, the first formal company, Bitso in Mexico, become the first recipient of a fintech license. We're seeing similar movements across the region. So I think they are actually beginning to think outside the box, because they're realizing that the industry is changing. They're realizing consumers are changing. And ourselves, and I'm sure Alex, maintain an incredibly open dialogue with all of these regulators, and many times they come to the network to help understand, new models and trends and behavioral patterns and all these things, right? So will we see sort of a chief fintech officer like, Singapore has? I'd love to, but maybe it'll take some time. But I think they're very well on a good path.
Yeah, and I think that it's also a responsibility of the industry, right? Just to really be close and be helping and bringing information, bringing best practice for the companies that are global. Also bring information from other places, right? So I think it's a joint effort, right? So I think that we need to take that as I would say a mission, in a way that we all bring in the best information to the table. That's the thought.
Okay, terrific. All right, we're just about wrapping up. Thank you to everyone for joining us. Very spirited, interesting discussion. I want to really thank our panelists for your guys' time and your insights and your expertise. I hope we can continue. We still had some questions we didn't get to. We can kind of try to share those offline if you're interested in engaging more with the panelists. I want to take just a moment to announce to everyone listening today that this session, this webinar, is the launch of a monthly webinar series that we are sponsoring called Latin America Payments Mastery. Our goal is to bring these types of conversations to you on a more regular basis. We have such an exciting environment and ecosystem in development right now, and so many conversations to be had. We at AMI, as thought leaders, want to craft that conversation for you and bring content on a regular basis that will be of interest. So our next webinar already is scheduled for February 27th. The format will be each of the 6 trends that we've presented today. We will be doing a deep dive into each of those trends. So our next webinar is about moving from cards to credentials, payment identity, digital identity for payments in Latin America. And we'll dive into all the technologies required to enable digital transactions in the physical world, from digital identity, tokenization, and others. So please Abel right now will share that registration link is already available. So if you go to the chat panel, Abel will share that registration link with you now. You can register for free right now if you'd like. Feel free to share it. And stay tuned for lots of new and exciting content from us. With that, we can go to our last slide of the day. And we have our contact information for our panelists if you guys would like to continue the conversation. Any final insights, anything you guys want to say to wrap up your thoughts today?
From my end, just thank you so much for the ability to participate. I think I mean, I wholeheartedly agree with you. This year will be very interesting in the region for a number of factors. We are reaching a point where we're having sort of record amount of, you know, fintech funding and fintech companies. We have a lot of shifts with, you know, real-time payments. We have a lot of things going on in tokenization. So I think, yes, it's going to be a very interesting year. You know, obviously we will continue, you know, focused on what we're focused, which is helping, you know, consumers and governments and businesses create the best possible payment experiences. Yeah, it should be a very fun year, right? With a lot of activity.
Yeah.
Yeah.
How about you, Alex?
Yeah, no, first of all, thank you for the invitations. That was a pleasure, right? My favorite topic. I agree. I think that we are opposed for, and every year I say that, but I do believe that this year we started, you know, with a lot of momentum in terms of work with banks and clients, really setting up infrastructure. As was said, as Arnoldo said, there is like last year was a record year for investment in Latin America. There's just like really great, incredible creativity and energy in the region, in the payment space, right? So looking forward to work with everyone, and once again, thank you for the invite.
Terrific. Okay.
All righty. Well, to wrap things up here, just in the event that you haven't seen the link in the chat for the next webinar, if you go to the that bar there, that black bar, there's 3 dots at the end that say more. You would click on that, and the chat option should come up, and you'll be allowed to bring up that window now, and you'll be able to see it and click. It's going to be kind of a now you see it, now you don't thing, because we're kind of out of time. We're actually over time. So if you can do that now, you should be able to see it. If not, definitely we'll be in touch to let you know about the next webinar regardless. So we want to thank you for your time today and coming out for our webinar, and hope to see you at the next one. So thank you very much, and have a great afternoon.
Okay. Take care. Thank you. Bye-bye.
Bye now.